Good evening, everybody, and welcome to this evening's webinar hosted by Dental Finance. Firstly, thank you for joining this evening's webinar, taking time out of your busy day. We appreciate how busy you all are, so we appreciate taking time out of your day to obviously attend this evening's webinar. My name is Tommy. I'm joined by my colleagues Luke and Bill, and this evening's webinar, I think, is titled Navigating Buying a Dental Practice. So I guess the aim of the webinar is to give you some insights into the current market. How has the market changed over the last 12 or so months? There's been plenty of market changes for buyers like yourselves. So it's going to provide an insight on the current market, what's expected of you as a buyer. And then we're also going to discuss, obviously, the funding process, what that looks like in terms of the whole buying process when looking to purchase a practice. And then from there as well, how we can obviously help you along that journey. So obviously, I mentioned with Dental Finance, before we start, just give you an overview on who we are and what we do. So we basically specialize in helping dentists secure funding to purchase dental practices, whether or not that's your first acquisition or part of a wider portfolio. Our job is obviously to assist you throughout that process. We work closely with all the major lenders in the market to structure the most suitable funding solutions, guiding clients through the process from start to finish, and basically making sure they're in the strongest possible position to move quickly when the right opportunity comes up. Alongside arranging the finance, we support with financial analysis and opportunities. That's helping clients understand the numbers, spot risks, and then make informed decisions before committing any further. Ultimately, our role is to simplify what can be quite a complex process and to give you clarity as the client and the confidence to move forward. So I guess this evening's webinar, what we're hoping you will gain from it. At the end of the webinar, we're going to try and allow 5 to 10 minutes or so, maybe slightly longer, depending on how long the conversation takes. But we're going to give you an opportunity to ask any questions. We're hopeful that any of the questions you do have right now at the start, we will cover that off. So we're going to look at a little bit of clarity on the buying process. So we'll look at the buying process as a whole and then the finance process and how they kind of align. We'll go through some common mistakes to avoid to help you streamline that process, anything to look out for, or certain things you should be aware of. We will also spend some time to talk about market insights. As I mentioned, firstly, in the first line, is that there's been quite a lot of bank policy change in the last 12 months. And I guess from a buyer's perspective, it's definitely a buyer's market. So a lot of those changes will be positive for you as a buyer. So we will go into that in a fair amount of depth and let you know what the current market is and how that's changed over the last 12 months. It may have been, a longer period of time than that since you last had a conversation regarding finance. So things may have changed slightly if you've ever had any previous discussions. And from there, we'll look at how to move forward with confidence. So I guess to bring Luke and Bill in, I mentioned there to talk about the buying process and how that aligns with the finance process. So Bill, just to give us an idea then in time scale of purchasing a dental practice, what's the reality in terms of time scales from when you find that practice to when you actually complete and get handed over the keys?
Okay, well, when you think about buying a house, it's normally about 3 months to buy a house by the time you've done all the searches and everything else. With buying a dental practice, it's normally 9 to 12 months or on from there, because there are a number of factors that actually take or can delay the completion. Leaseholds can be delayed because you can't get a hold of the existing lease owner, or he decides, or he or she decides not to consent to the lease, or be away or not respond, which is quite common with solicitors. Care quality commission issues come up, so that is something you need to start pretty soon after you've agreed to buy it and you've got the valuation in and things, and you're definitely going to be moving forward because you have to have a DBS certificate. And depending on where you are in the country, depends on how quick the police actually respond to that. If you're in London, it can be anything up to 3 months before you get the response. So sooner you get it in, the better it is. Specialist solicitors know all about this anyway. If you buy through us, you can have the CQC done through us as well, which is quite a help. So effectively, you are taking over the registration from the existing owner. If it's a sole trader, you are going to have to register it yourself. If it is a limited company, then you've got to be vetted to make sure you're okay before you take it over on that basis. One's a bit easier than the other. if it's a new practice and you set up a new one, then you have to have inspections and things along like that. So the timescales are a bit fluid. They do change. The fastest I've ever seen one done is 6 months, and that's when the owner and the vendor work together on absolutely everything to get it past the post. And by doing that, it was 6 months. It's fairly rare because there's normally hurdles because they don't normally do that. But if you can work with the vendor as well, it will be quicker. I think is the easiest way of putting it. But it's not going to be in 3 months. It's going to be 9 to 12 months as a minimum. And some of them, I'm sure Tommy, you could say the
Yeah.
longest one you've had, and Luke can say the longest one he said.
Yeah.
Yeah, I think there's obviously a lot of moving parts. I think to take away from what Bill said, there's a lot of moving parts involved in the sale of a dental practice. And the finance element fits into that as just as much as the solicitor part and obviously the CQC. So all those moving parts obviously come together towards completion. And finance sits in there as part of it. You will obviously have the specialist solicitor on board to go for the due diligence and make sure from a legal point of view everything is in place. Our job from a funding point of view is to do something very the same. So I guess that does allude to purchasing a practice with things such as refinance. The process can be slightly quicker. So, Luke, I guess if there was no other moving parts in it, and it was just from a financial point of view, I guess how quickly do in terms of the deals you're seeing day on day, how quickly are those deals from when you have that initial conversation with the client through to be in a position to draw the money if everything else is ready? How long does that generally take?
Yeah, to be honest with you, I mean, I think it ranges. I think one important bit to touch on, as we'll all know, is probably to make sure you've got the right team around you. So I think having a reliable specialist broker, or ideally like one of ourselves on board, obviously for the bank funding process, but also we can't tell clients enough about having a dental specialist solicitor, dental specialist accountant. That really helps speed up the process as well. Because if you've got a solicitor that maybe isn't dental specialist, the amount of times I know Bill and Tommy, we've all seen it, is that you might have a dental specialist solicitor on the vendor's side. You've gone for maybe a slightly cheaper option, should we say, or someone that's not dental specialist. They don't necessarily understand the process, and it can cause a lot more issues and headaches. So I think having them specialists on board really does help. I think one other thing obviously to consider is that I would say the bank funding process itself as a whole, probably from what we see, is that probably the longest part of the process itself initially isn't necessarily the credit approval side of the application. I think it's more the actual valuation that the banks will enforce to have done. So the banks will have a bank approved panel of RICS chartered surveyors that will go out and look at the practice. They'll want to look through absolutely everything with a fine tooth comb. And on that basis, they then come back and say whether the agreed price is fair and accurate. That typically at the moment we're probably seeing, I would say, I don't know if you guys agree, probably about 4 to 5 weeks in most cases. So realistically, I'd say credit approval, a lot of the times, depending on what bank you go with, you could be looking anywhere between 1 and 2 weeks. Realistically, then you're probably looking at valuation, which is about 4 to 5 weeks. And then a lot of it then sits with the solicitors, like we mentioned in the due diligence side. So if you've got a specialist who's really competent, and we've got plenty of contacts we can refer to you as well, they'll get straight on with it, and hopefully that'll help aid the process. So on average, especially with the tax deadline that's just passed, we've been, inundated with applications we've been trying to get over the line. I would say on average, Bill's right, 9 to 12 months is typically what we're told internally by our sales progression team. They kill us if we say otherwise. But I would say realistically, I'd probably see maybe 7 to 9 months with competent individuals on the case as well. So I'd say that's probably whereabouts we'd sit. So I don't know if you guys have any other opinions on that, but that's probably what I see most of the time on my cases anyway.
Yeah, every deal is different, isn't it? Every deal is different at the end of the day, and there are certain deals which will move a lot quicker than other deals. I think the key there is obviously having specialist advice on board on all parts of the sale, just to try and make it as streamlined as possible. I guess from my point of view, although that process for when you find the right practice could be from 6 to 12 months or so into looking to complete, I guess in an ideal world, we would always welcome a conversation with any individual looking to buy a practice, whether it be first practice, second practice, or grow your portfolio even further. I guess in an ideal world, we want to have that conversation at a really early stage. And the first part of that conversation, I guess, is to establish a budget, to go through some questions we have with the client. So I guess, Luke, in your first conversations that you have with the client, so if anyone's listening, they're looking to pick up the phone for the first time, what do you generally go through on that first phone call? What information do you need from the clients? Generally, what you're looking to get out of that short conversation that you have?
Yeah, definitely. I think the first thing that we always look to do, I think when we sort of talk to you, is that we want to make sure you get the most out of the conversation. So I think the first thing I'd always do is say, would you prefer me to go through a bit of an overview of the market, or would you prefer to go through any questions you've got first and foremost, and we go from there? I think understanding you as a buyer, as an individual, so your experience, your background is incredibly important, because that can help us build the case from there. What we're also doing in the background, I suppose, is initially with a bit of a fact find, is we're sort of trying to piece everything together to see what we can do for you and what sort of funding might be available when you find a target practice. And I'm sure there'll be plenty of questions that you've got to ask us as well. So that's what we're here to do. Now, I think when we have that first call, typically what we want to do, as well as understanding your experience and your position, we want to maybe look at them potentially, saying to you, right, we've got a couple of forms we'll get you to fill in, send them back to us. We can start to look to sort of establish an initial budget for you from there. And that's really where then that can lay the foundation for your practice search moving forward. So I think that initial conversation, to be honest with you, is incredibly important, because we want to do not only a fact find, but we want to make sure that you've got the confidence and understanding of the process so that we can work together and build that relationship moving forward. So I'd say for me, that's probably what's most important to start with. I don't know, Bill, tell me whether you guys think any different, or whether you've got obviously anything else that you guys do, but that's probably the process I take first and foremost for my clients.
I would say, yeah, that is right. We need to see exactly what you've done and what you've achieved so far in your career if you're buying your first practice, because the banks will look at it in different ways. There's no point in going and buying an endodontic practice if you don't do endodontics. And the other thing is, if you're going to take over as principal of a practice and your maximum turnover you've done is 200,000 gross, and you've got to do 350,000, we've got to convince the banks you're able to do that. So it's looking at a practice that you can actually achieve the turnover you've got to take over. So there's quite a few bits and pieces you look at on the way. It doesn't mean to say you can't buy that practice. There's all sorts of ways around it where maybe the associate does more and you slowly build up to that level. But it's just as is effectively establishing a budget and finding the right practice for you to take over. Tommy?
Yeah, a lot of it's about relationship building, right? Because the process can be fairly extensive. And it's about building that initial relationship that we have with clients that we hope turns into long-standing relationships. And that relationship is generally built on confidence. So I guess to give you an idea on why we would also recommend to have that conversation at an early stage is that we are presented with opportunities at times where individuals have already found a practice that they're looking at. They're keen to view the practice and to move quickly. If they viewed the practice and then they're in a position to make an offer, but they haven't had that financial discussion in the background, what that can then do is obviously delay things slightly. And I guess from a seller's point of view, and I've certainly experienced it, I'm sure Luke and Bill have done the same, is that if the conversation then happens at that stage, obviously time is fairly critical. And the longer the time frame goes on from when somebody views a practice and states they're interested to make an offer, can dictate how, I guess, a seller feels about a certain individual or a certain group buying a practice. If you can imagine, if you've had that initial relationship build, you understand your budget. We've, I guess, spoke through the financial analysis that we mentioned to give you the green light. Everything looks as it should, and you can secure the loan. If then you go and view that practice and you like it and you place an offer straight away, I guess from a commitment point of view, from a seller of that practice, there is also, I guess, a certain green tick towards your name that you seem committed. If that process can take, 5-6 days, depending on how quickly we can get the information together, we have instances where individuals have lost practices because an individuals are in a position to move at a quicker rate. So that conversation, I guess, from the benefit of us building that relationship means that, you've got the confidence that in the background we've worked to make sure that from a financial point of view, you're entering or you're purchasing a business that's on a stable footing. But from your point of view, you've got that confidence then that when you meet the seller, if you like the practice and everything as it should be, you're in a position to make an offer fairly quickly, which should stand you in good stead. Now, obviously, relationships are really important, and it's important that we understand you as an individual. At the end of the day, when we're putting together a financial application on your behalf, we want to give it that personal touch. So if you've written that application yourself, there will be an element of numbers and accounts and information we have to show the banks. But a lot of that is about us portraying you as an individual, as a clinician, your experience in the background. What particular interests do you have? Is there anything you're particularly looking to do at the practice when you take over? So that relationship building in the background does also stand you in good stead later on when we're putting together an application to the banks, as if you've written it effectively yourself. Luke did mention from establishing a budget point of view, there is some documentation that alongside that conversation we will provide. It's something that we call an ALI form, also known as an assets, liability, income and expenditure. Bill, what kind of information are we looking to see in there? What information are we asking the individuals to give us? And then what does then that allow us to kind of go back to them? With the information they've given, how does that then allow us to go back and review that?
Okay, so it asks about your address, date of birth, how much you earn a month, how much you're spending a month, gas, electric, water, mortgage, buy-to-let property if you've got one. It asks about your asset, whether you've got a house or whether it's got a mortgage on it, whether you've just got a lot of cash that you saved up. So it's just trying to establish what you've done with your money since you've qualified. Doesn't mean to say if you haven't got any cash that the bank won't lend you. It's more just finding out exactly where that funds have gone from or to. Some people have bought houses and have got a lot of equity in them. Some people have bought buy-to-lets and have got a portfolio because they started early and a large amount of debt, but a large amount of property with it that covers it. Or some people might have £500,000 in cash. It's just to give us a flavour of where we are with the person that we're dealing with, and it also helps to give a bank a flavour of what they're looking at.
And I think they're
Yeah,
not.
and like I say, go on, Luke. Sorry.
No, sorry. Yeah, I was just going to say, I don't think they're looking for, we're not saying to you, you've got to give us the pound and penny of the income, expenditure, etc. What we're looking for is just an approximate overview to start with that we can base our analysis work on. And what we're almost trying to do for you in the background is give a review of that form necessarily to say, right, can we iron out anything that we need to before we go to the banks to stop any sort of potential questions or flags? Is everything absolutely fine? Are we confident then of what funding we can get for you? And what you typically find, and it's something we'll move on to a bit later in the process about deposits, etc. This is also something that is used by the banks of what they feel criteria-wise they can probably get to. So there's no right or wrong answer on these forms. It's not a witch hunt. We're not trying to find out any information that, could lead to anything else. We just need to know you as an individual, build that relationship with you. And that's what the form helps us do alongside other analysis work as well that we'll touch on shortly as well. And I think that's what's so important about this is that I think it's always age profile against asset profile is what the banks are looking at, is where are you at, like Bill rightly said, since you've qualified, have you been investing your money, have you been saving it, what exactly have you been doing with it, and they can sort of build you as a profile from there then. And I think that's probably what you were going to touch on as well, Tommy, I'd imagine there.
Yeah, it does come back to that relationship building, right? And I guess the perfect application from a banking application from our point of view is that we present an application that goes to the banks and it returns with no questions and terms are offered. I guess what we're doing really early stage is highlighting any questions that the bank might ask. Is there any rationale for that? Again, when we're putting together your funding application, we're going to provide that information there as if you've written it yourself to really give it that personal touch. So I guess when we've had that initial budget establishment in an ideal world, the way I would put it is that then you as the individual purchasing a practice, you get the fun part. You get to go out and view the practice. You get to go out and see the site, meet the seller. The exciting part of seeing yourself. Can you see yourself working in that clinic? You get to understand the area, the type of makeup. In some instances, you can meet the staff. So you get the fun part. And I guess our role is to work in the background to make sure that from a financial point of view, you would be purchasing a business that is on a stable footing. And I guess from a risk point of view is that any risk that we would highlight in that practice are really brought to you at early stage. And answers are kind of given at an early stage before you make any commitment. So we would call that a stress test. So to break it down, Bill or Luke, it's up to you. But I guess what is a stress test? for a client that has never heard of one, what is that process? What do we use as part of that stress test? What do we need? And ultimately, what we're trying to give the clients at the end of it.
Yeah, do you want to touch on that? Do you want me to? I can touch on that if you want. It's not a problem. I'll start it, and I'm sure you'll hop in where needed. So, yeah, the stress test, effectively, to simplify it as much as we can, is the way that the lenders work is that they want to look at the latest 3 years accounts of the target practice that you're interested in buying. They're not interested in projections or predictions. They simply just want to look at those black and white figures that are in front of them. Now, a stress test that we would complete is on what the banks call their worst case scenario modeling. So there's no projections or predictions. We have to use a much higher stressed interest rate for you for repayments. And what we're almost trying to do is, by looking at the figures within the account, so taking the net profit and then the EBITDA adjustments, we're then effectively looking at a loan at a much higher interest rate. We're stressing the capital, repayments, and adding the tax on top of it. And we're trying to see whether you can still take a comfortable salary from that practice to cover your cost of living. So it's mirroring exactly what the banks will do as to whether they see it as a viable purchase opportunity that they can support with a loan. Now, typically the way that a stress test will work, and I'll let you pick up on this in a minute, Bill, is effectively we'll get the 3 years accounts side by side. We look for any trends within those accounts, whether any costs have gone up, or it's anything we wouldn't expect, and maybe we need to normalize some costs. I've seen, I'm sure you guys have as well, in some accounts. I mean, I saw a stationery cost at about £40,000 the other day, and either they've got some really expensive pens and pencils, or there's something not quite right there that we need to dig into. So I think that's something that we need to look at, and that's what we will do for you. We'll almost vet the practice and the accounts of the latest 3 years, make sure that everything's running as we would expect. And from there, then, as we're looking through those 3 years accounts, that's where we can really dig into the figures and say, right, yes, we think it's a viable opportunity or not. What we're ultimately trying to do for you is, subject to how you've informed us when we've had the fact find conversation that we mentioned a moment ago, of how you're looking to try and run a practice, whether you're going to be there 5 days a week, 3 days a week, you want it associate led. We're trying to run the practice in that manner to see whether that could be profitable for you on the worst case scenario modeling. And also, what we want to try and show to you is how we think is best to present to the banks to get you those very best interest rates and LTVs. So we know how the bank's policies work. We know how thresholds work. We know where you've got to be to get those very best terms that we want for you. And what we're here to do is tell you, one, whether it's a viable purchase opportunity, but also how much work we think you need to be doing in the practice based off those 3 years accounts to get the best terms. So I don't know if anything else, Bill, that obviously you want to pick up from there, but that initially is what I would say we're looking at.
You only want audited accounts. You don't want management information, because if you want management figures, tell me what you want and I'll put them on a management account.
Yeah.
They are not reliable. They exactly say what they are on the tin, management only. So they're not being checked by an accountant normally. They're just a management figure. The reason for the 3 years is that if you've got 3 years audited, and I have seen it where you've had 3 years audited, and 1 year has got a lot lower income, a lot lower materials, lab bills, and wages, where the guy, and it's all up the end of the tax year, and he's put it up for sale, and these are the latest accounts. So he's told his staff that he can't pay him on the 31st of March because he's got a cash flow issue, but he'll pay him on the 2nd of April, and he'll cover any overdraft checks. And I've actually seen this happen to a dentist that bought a practice. But you see, if you have 3 years, you've got an immediate comparison to the other two. So you know something's not right, so it becomes a query. And what actually happens is, you see those are the figures you're given for sale, and the accountant will verify those to the solicitor. What you don't know is the guy's got another 9 months to actually go back to the accountant and say, oh, I made a mistake. I forgot to put these in. Can you adjust the figures? Now, unless it takes over a year and he's going to produce the next year's accounts, you're never going to know that's what happened. But I was sat doing a seminar with somebody and went through all this, and they slowly watched their face drain of all the colour, because that's exactly what happened. That's why you get 3 years. Nice comparison, and you can see where it is. We take off all the bits and pieces to make sure that it is affordable and you're going to be able to live and, £2.50 a month isn't going to be enough to cover your mortgage, which is 2,500. We've got to make sure everything works. And that's exactly how the banks work. They work off black and white figures, and what we tell them about what you're doing and your CV and everything else. So it's packaged up to them. So they will write it to their credit board on the information's given. So when you fill out the ALE, don't forget to put everything on it. Don't miss a credit card off it because you paid 10,000 off somebody's account and you're just covering the interest at the moment. Put it on there, because when they do their ultimate checks and credit searches, they find that that one's not on there. That's going to ring a red flag immediately, and they could change the whole way they're looking at it. So put everything on there. Don't worry about it. There's reasons for everything that people do things. If you can explain it, you know, you needed £10,000 because you needed to get your mother back from India or something like that, because, you know, your father wasn't very well and you had to pay all that to get it back out. That's a legitimate reason. You know, it's not as if you've done anything else. So, you know, just be 100% faithful in what you put on those forms, and that's exactly how the bank are going to look at it.
Yeah, because they'll look
that
at
stress test is mirrored, isn't it?
Yeah.
That stress test, sorry, is a mirror of how the banks are going to assess your application. So I guess from your point of view, as somebody trying to buy that practice, is you're almost getting a kind of an idea of how will a bank assess this opportunity for me. You're seeing live how to do it, and we've mirrored that stress test based on how the banks would view it. And I guess when you're looking to buy a practice, there is clearly a valuation for that practice. You're going out to a practice that's been given a valuation by a broker. Our job is to understand what's that practice worth to you. Now, based on how you're going to run that practice, it might not be a case of that, you know, you could fund it up to an asking price offer. Our job is in the background is to give you the comfort that, look, maximum loan for this particular practice based on how you're going to run it and based on the information provided is this amount. Now, you might be in a ballpark figure where you think, actually, it might be worth me making an offer at that level, or you might simply walk away with the comfort knowing you've done everything you can to see if that practice will work financially for you. And at the end of the day, if it isn't the right opportunity and it doesn't work financially for you, then obviously you go away and find something slightly different. So we're kind of going to mirror how the bank's going to assess the affordability, try and make it as simple as possible for you in terms of how much money is left at the end of the day for me to draw from this business based on how I'm going to run it. And that process, like I say, is for us to work in the background, give you that comfort, that confidence that if you want to proceed any further, to commit into purchasing the practice that in the background you're comfortable with from a financial point of view.
Yeah.
Now, I mentioned obviously market changes, and obviously I can see some questions here about deposits. So I think it's important to give you a bit of an overview on the healthcare market, or more specifically the dental lending market, which I mentioned has gone through some major changes in the last 12 months. Ultimately, dental is seen as a green light sector for the major healthcare lenders. They're all very honest in telling us that. The individuals at the banks are looking to lend in the dental sector. So for yourselves as dentists, it's obviously a really, a low risk space in terms of lending, and that is reflected in the bank policies that are on offer for you. I mean, around 12 months ago, things were slightly different. So I'm sure Luke will give us an idea in terms of loan to values. But what's happened is we've seen a number of major tier one lenders enter into the market around about 12 to 18 months or so ago. And they kind of shook up the market with some really positive bank offerings in terms of loan to values, rates they're prepared to offer. And what that did is all of the other banks that were already in the healthcare space or the dental space, it made them sharpen their policy, and in some cases quite significantly. So from a buyer's point of view, we could have had this conversation maybe 12 months or so ago, and in terms of options in the market, they could have been fairly limited. Now you're looking at a situation where there are a lot more options out there for you as a buyer, and it is really competitive, which means that from a term point of view, you're obviously benefiting from that. So Luke, just give us a bit of an overview on what's happened in the last 12 months. Where were things before, and what kind of changes have taken place that will benefit everybody that's obviously listening to the call?
Yeah, so I think there's been sort of multiple changes in a lot of policies, as Tommy rightly mentioned there. You know, there's been a couple of lenders that have really dove into the market and said, look, we want to be one of the biggest lenders, if not the biggest lender, and rival your likes of Lloyd's, etc., you know, on the lending side. And what we've actually seen is that whereas previously, if we go back probably 12, 18 months ago, I'd have said top LTV range for goodwill probably would have always sat at about 90%, but only with maybe one lender, one or two lenders maximum. You've now probably got a plethora of lenders, probably maybe even 4 or 5 lenders that are willing to go up to 90% now. And that isn't just for NHS practices, that's across the board now. We're seeing that, whether it's NHS, mixed, private, which is good news. But actually, I think the biggest turning point regarding LTVs is the fact that lenders have now introduced the possibility of up to 100% funding for both goodwill and freehold. So freeholder's standard was always 100% that we could achieve. However, if a freehold was split between residential and commercial, so you had a residential flat at the top and a commercial flat at the bottom, they might have said, we'll do 100 on commercial, 70% or 60% on the resi. What they're actually now saying is, across the board, they'll do 100% on a freehold. So we've had a few cases, I know Tommy and me and you for definite, few recent where we've had a residential flat included above, commercial premises on the bottom, and we've achieved 100% funding for our clients for the full freehold, which is great news. As for the goodwill side, again, we've had, I'm just going back probably since this was introduced, I would say at the turn of the year, I'd say probably January time, Tommy, if I'm not mistaken.
Yeah.
I would say that's where it really picked up. And I'd say since then, we've had so many cases already that we've achieved 100% funding for our clients on. The only caveat to it is on the basis that you are a first-time buyer for the 100% funding outright. However, even with that, because they're becoming so, trying to enhance these policies and becoming so competitive, we've actually had cases where if you're an existing practice owner, but you're partnered with a first-time buyer, they're still willing to go to their credit teams to try and achieve the 100% funding. And I've had a case already this week where that has actually happened. So there's a lot more flexibility there on LTVs now. I'm not saying they're just handing out 100% for everybody. We do have to say, we can never guarantee until we go to the lenders. But what they're going to do is it all comes back to that asset profile form, the AILI form that we mentioned. If you're a strong individual, you've got a good asset background, the target practice is strong on serviceability. So when we do our analysis and show you what we think is the strongest case, putting all that together will really help to get towards that 100%. Now, if you're obviously an existing practice owner, and you're looking to obviously expand your practice, a lot of the time what you'll find is obviously first-time buyers get 100%, and then a lot of lenders now will typically offer 90% then for remaining purchases. Some will go to 90% for 4 or 5. There are a couple of lenders out there now that will just do 90% across the board for the next however many purchases you go for. You have got the beauty with owning some practices where if you've got good equity in those practices, you could leverage against them to obviously gear up and effectively use equity out of those practices then to buy future practices or further practices. And I think one other important change on that as well for people that are looking to establish a portfolio, which is quite important, is that Bill, you'll know this as well, and I'll let you jump in on this in a second, but you used to have to wait maybe 12 to 18 months minimum to buy another practice after you bought your first, second, third practice. They wanted to see that string of accounts that proved the financials. What we're actually seeing now is because it's become so competitive for buyers, a lot of lenders now are actually willing to look at second, third, fourth purchases within maybe 3 to 6 months or so. So I've got clients that own several practices that have built up and done that. And that's a huge bonus. So I don't know, Bill, if obviously you've seen anything more in the market as well on top that you want to add in there.
Yeah, it has. It certainly has changed because lenders are prepared. I've got a guy at the moment that's bought one every 2 years and now is looking to buy quite a number. And they weren't as the lenders weren't that, shall we say, favourable towards him to start with. But all of a sudden now, because of what he's done with the existing practices, it's like, oh, he knows what he's doing. So we'll help him. I mean, the other thing that's changed to my memory, if I've got this right, is goodwill lending used to be 15 years fixed, and some of them will now do longer periods on that as well.
Correct.
So that also helps debt serviceability as well. So interest rates are changing. We've seen banks that come out with partial amortizing loans that will fix it for 5 years at we have seen down as low as 1 point something percent above base rate. But that's for a 5-year term, and at the end of 5 years, you've got to look and renegotiate it. So it's a balance off. We got ones where they're looking at capital repayment holidays for a while, or not interest holidays, just capital repayment holidays. And these all things that are now coming into the market that it shows the appetite that banks have got. There are also in the background, because we've certainly been speaking to them here, other banks outside that aren't necessarily high street banks, but aren't, are all Bank of England registered, etc., that are looking to come into the market. So it shows you that the appetite to lend is growing across the financial sector. It's a low risk sector for the banks, which is why they're prepared to lend maybe 100%. They're prepared to lend at the low rates because they're not losing money. Sorry.
Yeah, I think, I guess from what Bill is, to latch on to what Bill has said, is that bank policy was fairly established, right, over a period of time, is that it was fairly structured. The changes that have taken place since it was shaken up a little bit by HSBC's introduction meant that all bank policy has slightly evolved, and there are lots of different nuances within that policy now. I think you mentioned the capital repayment holiday. A good point on there, an example of where that may apply, is that a certain individual that owns multiple practices has got a fairly well-established relationship with a particular bank, and they've had a relationship for some time. They've helped them grow. Obviously, sometimes by having that relationship with a finance broker, it allows you to be aware of what else is going on in the market. And there's certainly one individual that had one relationship with a certain bank that was offering capital repayment holidays. I guess from the point of view of that individual or that group that owned multiple practices and was looking to expand, what that allowed them to do is to give them a period of time where they could save some additional cash to then reinvest and to buy at a quicker rate. So I guess it does come back to that relationship, and there is quite a common theme in a lot of our conversations with some individuals that maybe have a relationship with a certain bank, particular bank, whether or not it's that their personal bank, and they think that going direct to source is I guess, more favourable. Or individuals that own multiple practices and they have a relationship with a certain bank and think that ultimately that relationship is that the bank are kind of doing them a favour in a way. Is that I would always welcome that conversation to understand what else is going on in the market, certainly with these recent changes that have taken place, but what else is going on in the market? Does that particular bank you're with align with your plans for future growth? Because there might actually be a better option out in the market to help you do what you want to do, certainly at a quicker rate. I know we're generally talking about first-time buyers, Bill. If you have got, I guess, a group that owns a certain amount of practices, what kind of leverage do the banks generally want for those kind of groups or those certain individuals that own that amount of practices?
Well, generally, I mean, you can go up to, if you have the EBITDA figure, which is worked backwards, and the add-ons that, the depreciation and amortization and things, so you get a higher EBITDA figure. You could look at maybe between 4 and 5 times multiple of a lend. But what you've got to remember is the 4 and 5 times of the ones you've got at the moment, right, is the lend that you can go at. But when you bring the new one in, that's going to go on top as well. So it can give you quite a large, debt serviceability level. They look at it on that level, but you've also got to have it in the right structure. So if you're going to do multiple purchases, think about it. If that's your ultimate game, think about it from the start. Have a top company, which is the holding company, and all the other ones which are wholly owned subsidiaries underneath. And then all the lending goes through one company, the top company, and they all own all the shares of company B, C, D, E, F, etc. You can also have a property company where you put it in just as a property holding company, which again is a wholly owned subsidiary of the top company. So by linking it in that way, it makes it very easy for the person or for the bank to lend to it. And if you want to get rid of one of the surgeries because you decided you don't like it, getting rid of it's easy as well because it's its own limited company and you sell that off as an individual. So, and there's a lot of banks out there now, or all the major high street banks all look to do multiple practices. So don't think just because you've got five that they won't do another 10. They will. If it all
Yeah.
works, they will.
I think the market probably, I think we'd all agree, probably hasn't been as buoyant as this for quite some time. I think there's always been definite interest there and plenty of buyers. But I think what we found is probably post COVID, we had that, sharp interest rate rise, and you found that there were still buyers in the market, but maybe it wasn't quite as competitive for certain practices, and people got in and, got some absolute steals, and the ones that were confident to keep going and buying in that market. And what you're finding now is because the market has become so competitive, and there are all these lenders now desperate to lend, and they're all competing with each other. This is the great thing about, or that we find being a specialist broker, is because we work with several tier one major lenders. When we tender out to them, they all know that they're competing against one another. They don't know what each other are offering, but they're blind betting. So they've got to put their best foot forward straight away. And we will do everything we can to make sure they give you the best terms. We'll be writing that application as if it were for ourselves, because that's how we do it, to build that relationship for you. We want what's best. And I think that's something that's really key. Because when you've got a broker that will sit there and they'll fight as much as they can for you, but they're also going out to all these banks that are competing, what you now find is that if we can get you the best terms and we can get you the funding support, if you're up against 3 or 4 other buyers that maybe aren't using this specialist broker and have gone to the bank direct and they've gone to one bank, had a conversation, they don't know whether they've actually got terms in front of them. So if they ask for proof of funding, they might not be able to provide what we could for you or what you'd be able to do that we've supported you with. So I think that's always very key as well. I think, Tommy, obviously, whether it's an internal practice with Dental Elite with us or an external one, we're not limited to Dental Elite practices. We can help you with anything. But I think regardless now, if someone says, well, who are you working with? Or I'm working with Tommy, I'm working with Luke, I'm working with Bill at Dental Elite, they at least say you've got a specialist broker on board that's going to get those terms, and we'd be able to provide them with a proof of funding for you as well.
Yeah, I mean, from indirectly having discussions with sellers or to certain brokers can sort us out in the market selling practices. Whilst price is obviously a driving factor for sellers in terms of them looking to sell their business, price is an important factor, of course. Part of that is also about which buyer am I most likely to complete the sale with? Because at the end of the day, investment in terms of time and money, there is a financial commitment if you go down the road with a buyer and it doesn't quite work out. I guess what working with a specialist brokers such as ourselves would give you some reassurance is that it gives the consultant or the seller some reassurance that you're working or have already done the financial due diligence to support any offer you make. And therefore, it can be a deciding factor in some cases in terms of, the likelihood or I guess the strength behind that buyer in the background. How likely are they to achieve the funding that is required? I mean, I guess another benefit to using a finance broker and something that we obviously speak about quite a lot is that we are working with the major tier one healthcare lenders. Therefore, obviously, what is stopping an individual going to those tier one lenders themselves? I guess the way we would pitch is that we work with 7 high street lenders. So in one application, those lenders, all of those 7 lenders, sorry, are getting your application in one go. And what we're giving them is 48 hours to respond with some terms. Now, for yourself, obviously, if you were to go around those banks individually, setting up meetings, going into the branches or finding an individual to speak to would be fairly time consuming. So from a time point of view, there is obviously a benefit to having that application and having your terms within such a quick turnaround. But Luke touched on it, and it's the fact that when they see an application from a specialist broker, they understand that all of their competitors are seeing the exact same application, and therefore it should give you some comfort that they are going to put their strongest foot forward. Right, if you go into branch, there's an opportunity that maybe you won't be going into the other banks, and therefore, I'm not saying that they won't give you the best opportunity or the best interest rate or the best offering, but quite clearly, if they know they're competing, and at the end of the day, from a price point of view or from a term point of view, if they're not within the top 1 or 2, generally that we're then presenting to you, they generally don't get a second look. The second bank or the second best offering might get a second opportunity to either look at their interest rate or look at their terms. How can they improve it? But generally, the other banks then don't get a second look. And so I guess the major benefit from our point of view is obviously improve terms and streamlining that process for you, I guess, to be as efficient as possible.
Yeah.
I mean, we are going direct to the 7 banks, the 7 specialists that actually deal with healthcare, that actually deal with dentistry, that actually understand it. So they're the ones that are getting it, giving the price. If you went into a local branch and asked about buying a dental surgery, I can assure you now the chances of you finding one, somebody that'll understand it, two, that will think that you can actually borrow £500,000 unsecured, I would be amazed if I would find out one finger to say, "Oh, I found the one person." They're not in branches, and you'd have to arrange an appointment with a business centre, and even then, um, them understanding it is pretty limited. The banks that we use all have relationship managers that understand the dentist market as well. So you're going through our broker network that we've got that we go into for the banks who are specialists, who understand it, who might ask us a couple of questions. So what's happening there? Why are they spending £150,000 on advertising? Well, they're doing X and Y, but they're actually only getting £5,000 worth of work. Right, okay, stop the advertising, look at another way of doing it. You can add it back onto the bottom line. So they're looking at all the stuff we do, and quite often, we might have a couple of questions back from the business development manager we go into, asking, just a couple of which we might not have picked up on, or they might just want a bit of comfort on before they take it to the next, before they come back with a quote. 9 out of 10 times we just get the quotes back these days, and this is our rate of whatever. But that's 7 quotes. We're not going to make the decision on the quotes. We're going to send them to you, so you're the one that makes the decision. And the other thing about it is the fact of we get paid by the banks. We're not charging you at all. So the banks pay us on drawdown of the loan amount. Some will pay 0.75%, some will pay 1%. So it's all open. You know exactly what's happening, but there is no additional cost to you. So in theory, in that case, why would you go to 7 banks if somebody will do all the legwork for you and it's not going to cost you anything? Use us. We're free.
Similar kind of the way I would put it is that, if you're going to get an extension on your house or you look at some home improvements, you're going to go out there for more than one quote. You're not just going to take the first quote that you see. Effectively, we're offering to give you those most competitive quotes in one go within 48 hours in most cases. So certainly would welcome any conversation. If anybody does have any questions, that we said would save some time for questions. So obviously keep an eye on the amount of time we've got left. Some of the questions we've already answered. And I know we've spoken about loan to values, bank policy. There's a question here regarding a £2 million purchase price. Obviously, an individual has found a practice that's got a valuation of £2 million with a goodwill. How much deposit do I need roughly? Now, I know we've covered this maybe a little bit long-winded in terms of the process and how we would help determine that. But Luke, can you give us a snapshot of how much deposit would the individual need? And I guess, are there any determining factors that would affect the loan to value that they're going to achieve?
Yeah, I think probably if we go back to obviously the stress test, I think dependent on obviously how serviceable the practice is and how profitable it is, how strong you are as an individual, I would always say now if it's 2 million, let's just call it £2 million goodwill dead on, and it's goodwill only purchase for £2 million. I would say realistically, I'd be saying to you, keep in your head probably a 10% deposit or up to a 10% deposit may be needed. I think if you're a first-time buyer, I would be saying, look, I'm going to be gunning for 100% finance. I'm going to be going for that. If it is the strongest case, that's what we want to try and do for you. If you want to keep cash in the background, that is. But if you want to put 10% in, that's entirely your choice. If I go off examples, I mean, I'm thinking through all the deals that we're doing at the moment. I've got one, for instance, that I had approved. I think it was yesterday or the day before, and it was a £2.6 million deal. I think it was 1.9 million for the goodwill, and the rest was on the freehold. And I got 100% funding for it. Now, the banks will cap out eventually. I think if you get up towards sort of 3 million and it's one individual, one thing they will start looking at is the risk assessment. So for a first-time buyer, do they want to lend 100% funding to, that much money to someone for a first purchase? If you've got a strong enough asset profile, then there's certainly that chance. But I think if you're looking around that 2 million mark, I'd say realistically, we're very close to the sweet spot there, and I would be gunning for 100% finance, as I know Tommy and Bill would be. But I think probably in your head, I always like to say we'll do everything we can to get that highest LTV. But I think you've just got to be aware that up to 10% could be needed. They might say, look, we'll do 95%, and they might want 5% in. But that's the glory of us going to these lenders like Tommy and Bill were mentioning just there, is that when we go to all of them, you'll get a plethora of offers. So it could be 90%, some will do 95, 100. And from there, you can choose then what's best for you. So I don't know, obviously, Tommy, with any of your recent deals, whether you've got any similar debt size you probably have that you would say from there.
Yeah, I think at the end of the day, our job is, I guess from my point of view, what I wouldn't want to do is overpromise, sorry, and underdeliver.
Yeah.
So yeah, 100% funding is achievable, right? And we're well aware that it'll be a major talking point for everybody listening. Is that how much money do I need when looking to purchase a practice? So 100% funding is available. There is some caveats to that. I guess in the background, if there's anything you can take away from this evening's webinar, it's that have in your mind that worst case scenario, that 10% deposit. If you've got that 10% deposit, then obviously that is, I guess, a realistic approach. So if you've got a certain amount of cash and savings that you're prepared to put in this deposit, have that as I guess, a mini budget if you want to give yourself a brief budget. If obviously then we can extend it towards 100 loans to value, we obviously will do that. I mean, yeah, likewise as Luke. I've had deals in excess of £2 million where we've achieved 100% funded. And again, we've had deals that maybe are closer towards the £1 million or beneath the £1 million mark. And at that point, we can't achieve 100% funding, and it's more sitting at 90 loans to value. So each case is obviously, it's case by case is specific. There's a lot of moving factors that determine that. But if you have in your head that a 10% deposit is your cash, that kind of gives you, I guess, a brief idea of the budget you're looking at.
Yeah.
If you haven't got a deposit, if you haven't got the cash, don't give up, because if you've got a property that's worth, if you put your money into property and you've got a property that's worth, let's say £500,000, and you've got a mortgage on it of £100, you've got a lot of equity in there. You can use what is known as a pseudo deposit. So if you give a second charge over that, it's not actually taking money out of it, it's just charging it to the banks to a certain level. So, if it's 500,000 and you've got 100,000 mortgage on it, the banks say in their books it's worth 70% of the open market value less the first charge, which would be 100,000 mortgage. So if you say from their point of view it's worth 350, you take off your £100,000 mortgage, you've got £250,000 worth of chargeable security, which is as good as a deposit for them, because it's £250,000. Nobody's actually giving you the money. It's just a piece of paper that's charging over your property. So that's another way to get a deposit if you need one. It's not only cash.
Yeah, and that's what the asset form is obviously really important as well, Bill, because we're not just looking at your cash savings. We're going to look at your assets in the background in total, and that includes any property, any asset that you have. And what we also are looking at, as we spoke at the start about, processes generally take 6 to 12 months. We will also look at what is the disposable income amount that you have each month. What that might mean is that you have a saving capability of a certain amount, which means that if you're in that sale process, even if you agree the deal today, you've got some saving capacity, and we would pitch it to the bank on that basis. So that really early stage relationship building is obviously quite key. A lot further down the line. We just had one question come in. I know that Bill and Luke, both of you have had instances where you've secured deals based on this kind of scenario. So the question is that basically the individual owns a practice, value is just short of £1 million. There is no mortgage left to pay, no bank loan because they're completely unencumbered. They're looking to refinance and raise some funds against the practice. How is that possible, and what is possible in that kind of scenario? Whether that be investment for a practice, or are they limited in terms of what they can raise funds against to invest in?
Yeah, it's fine. I'll let you start, Bill, and then I'll chip in. That's absolutely fine.
Well, yeah, it is possible to do it. It depends on what you're going to use it for. Because banks aren't into pop finance. They really wouldn't like you to refinance against a dental surgery and go and do a lot of property investment, because they have a different lending criteria for that. So if it's going to be used for practice extension or used towards buying a second practice, they will look to support that. If you're going to use it to go and buy something else, a flat in Dubai or buy 5 buy-to-lets, they're not going to be open to that because they have different criteria for it. But you have got an unencumbered practice, you have got an asset there you will be able to use.
Yeah. Yeah, I would say just chipping in on that. I mean, I've got quite a few clients. I think I echo what you say there, Bill, is that it is all subject to what you want to use it for, really. If you want to take the equity out to buy a Ferrari, they're probably not going to be too keen on that. But if you want to use it to maybe gear up to buy a second or third practice, we have had clients even, in good scenarios similar to what that sounds like, where they've even been able to maybe buy 2 practices at once. That's not out the realms of it. So there is plenty of possibility. What they probably will want to do on a bank perspective, just to give you an indication, is they almost certainly will want a professional valuation on a bank approved panel member to be done. They'll then come back, and so it might have been recently valued at 970. Hopefully the bank value will come in at the same, or you may find it even comes in at slightly more. They'll look at obviously what you've got regarding debt. So if you've got no debt on it, they'll say, okay, well, you've got X amount of equity here to use. Typically, like Bill mentioned earlier, they'll go to about the LTV percentage they can typically offer. So they might go up to 90%. So if it's worth £1 million to keep it easy, they might say you've got £900,000 they could give you towards the next purchase or what you want to do. So you have got a lot of scope there if you've got that equity, that if you are looking to grow and start, building a portfolio, that is a huge potential option that you've got there with so much equity available. And all the bank are really going to be probably bothered about more so on that side if you are gearing up the equity for another purchase. And you'll know this as well, Bill, is they just want to make sure that whatever equity you borrow, the practice can still service the debt. So at your amount of low equity, I'd imagine, 100, 200,000 probably isn't going to make too much of a difference to the serviceability. But if you're someone that's got a fair bit of debt on their practice and you're at 85% and you want another 5% out of the practice, they've just got to make sure the way it's performing can still service that debt. So that's probably the point I would probably just tape onto you, Bill, to be honest with you. I don't know if you've got any other things, Tommy, on that at all.
Not particularly. I think you've covered it off. I think what that situation kind of outlines is that every conversation is individual and it's specific to you as a client or as a group, whoever you may be, micro consolidator, someone looking to buy their first practice, looking to grow their portfolio. The conversation is specific, so there's not a one size fits all answer. Obviously, like the conversations we've had this evening and most of the information we've been through, are trying to give you a snippet of what is a one size fits all answer. So as we're nearing towards kind of the end of the webinar, I would just urge if anybody does have any questions to get in touch. Obviously, we'll share the details. I'm sure the marketing team will share our contact information. You can obviously get our information on the website as well. And we just urge you to have that conversation. Now, you may not be looking to buy a practice straight away. You might not be looking to grow your portfolio. But we would urge you to have that conversation. Everything is completely specific. So hopefully we can give you a little bit more detail in terms of what's available to you. So if there's anything to really take away from this evening, from my point of view, it's just to have that conversation and to understand your numbers. So have a conversation with a finance broker, understand what your numbers look like, and then get prepared before you're viewing those practices that puts you in a position to move fairly quickly when you do find the right practice, whether that's your first practice or whether you're looking to grow even further. Get prepared before you're viewing, and then you're ready to move quickly. Even if you are 6 to 12 months away, having that early conversation puts you in a completely different position and might give you a slight upper hand on any of the buyers. So I guess from my point of view, just to say thank you everyone for joining. Luke or Bill, I don't know if you've got anything else to add
Just
before we close off.
I think we've just got one quick final question, Tommy, just to cover. I think someone's just asked about squat practice finance potentially on that. So yeah. I'm happy to pick up on that just briefly, to be honest with you. So in comparison to probably what we've told you tonight on LTVs, just make sure you sit down when I tell you this. So basically, there's not as much appetite in the market for squat practices. So if you are a first-time buyer, at the moment, I would say there's probably one lender or one main lender in the market that can support. If you own an existing site or you've done squats before, then there could potentially be up to a couple of lenders in the market, tier one, that can support. LTV wise, you're probably looking more towards around 70% of the build out cost and the freehold cost if you are looking to buy freehold alongside it. So you probably need around around a 30% cash deposit, sometimes can go up to 40, depending on the case. The way in which the lenders work on that is slightly different to how they would for an existing site. So existing site, as we mentioned, they'll look through the latest 3 years accounts, and obviously they'll look at the EBITDA and then work the calculations off there for the interest repayments. Squat practices is slightly different. What they'll do is they'll actually ask you for a minimum, normally about a 3-year cash flow forecast from your accountant. Your accountant will produce that. They'll also want a comprehensive business plan. So that business plan needs to include unique selling points, your pricing structure, the location, are there any competitors in the area? Everything you can think of needs to go into that report. And from there, then, to be honest with you, other than a couple of documents, it's normally just CV for your background and another few documents, personal documents. So I would say typically you tend to find that from a lending point of view, that there is a lot less appetite. And just because, as you'll know, Bill, a few banks in the past have been burnt on some squat deals, which has made them a bit more reluctant to support. But it's not to say funding isn't there. We do help people with squat practices. So if it is of interest, we can certainly have that conversation as well. So I hope that sort of helped answer the question.
Yeah, I guess with an acquisition that we mainly covered on the webinar, lenders are relying on historical performance to support a loan. With a squat practice, obviously they're backing you in your business plan. So in terms of detail in the background, the business plan needs to be fairly comprehensive, and there's a lot of information that goes into that. But at the end of the day, from the point of view of squat, in terms of setup costs, and purchasing a practice, generally the cost against buying an established practice and the cost of setting up a squat, they're fairly different. So although the loan to value change, I guess initial investments can sometimes be around the same kind of level. But again, just urge anyone that has any questions on squat specifically, do reach out. Our information will be sent to you. I'm sure you'll have all of our contact details. You can find us on the website as well if you have anything to ask. From my point of view, just thank you for joining, for taking time out your evening to join us on the call. Hopefully you found it insightful. This is the first webinar that actually Dental Elite Finance have launched individually. Normally we're kind of included on some of our sellers webinars. So we would really appreciate any feedback you can give as well. So if you do receive some information in terms of our details, just please, if you can spare 5 minutes, give us some feedback so that obviously we can make these webinars, I guess, more informative moving forward. That would really help us out as well.
Yeah, brilliant. Thank you.
Thank you.